Welcome to Skytech-Lens. Tonight, we begin with a story of unexpected consequences, a decision in Washington that sent tremors through the global economy. On August 12, 2025, the Trump administration imposed a sudden 39% tariff on 1 kilogram gold bars from Switzerland, aiming to shrink the $40 billion U.S. trade deficit with the Alpine nation. The White House called it a necessary step to rebalance trade, but the result was a shockwave, not a quiet adjustment. Gold prices in New York soared to a record $3,548 per ounce, creating a $37 gap with London's benchmark. The smooth flow of gold into the U.S. was violently disrupted, leaving traders scrambling and shipments stranded. Over 18 tons of gold, worth $1.20 billion, were caught mid-shipment, their financial calculations upended. The arteries of the transatlantic gold trade clogged overnight and the shockwave rattled U.S. industries. From Fifth Avenue jewelers to Silicon Valley tech firms, the tariff hit hard, driving up costs and straining supply chains. Wholesale jewelry prices jumped 11% in a week, squeezing businesses large and small. The administration's bold move to correct a trade imbalance had, in days, created a domestic economic crisis. What was meant as a lever of pressure became a grenade in the machinery of global gold markets. To grasp the disruption, you need to understand Switzerland's unique role in gold. Switzerland refines nearly two-thirds of the world's gold with four major refineries: Valcambi, Pamp Suisse, Argor Heraeus and Metallurg, turning raw gold into the global standard. The U.S. targeted Switzerland due to a persistent $40 billion trade deficit, hoping the tariff would force negotiations. The move followed failed tax talks in Washington, signaling that if diplomacy failed, economic weapons would be used. Swiss leaders condemned the tariff as economic hostility, warning it eroded trust in global finance. For Swiss refiners, losing their largest customer meant redirecting massive shipments to Dubai, Singapore, and Shanghai. The flow of gold didn't stop, it simply bypassed the U.S., isolating American buyers from their primary source. Rival financial centers absorbed the redirected supply, while U.S. businesses were left scrambling. The policy designed to pressure Switzerland ended up isolating the U.S. from the heart of the global gold trade. Capital and goods found new routes, highlighting the adaptability of modern trade. The intended revenue for the U.S. Treasury evaporated as gold rerouted globally. The U.S. market, not Switzerland, became the one left out in the cold, a classic case of an economic self-inflicted wound. The aftermath was chaos. Gold futures in New York and Chicago soared, reflecting a sudden supply shock. The price spread between New York and London hit an unprecedented $37, signaling it was cheaper to buy gold almost anywhere but the U.S. 18 tons of gold worth $1.2 billion were stranded mid-shipment, leaving banks and investors in a logistical nightmare. Logistics managers faced impossible choices: pay the tariff, divert shipments, or absorb losses. The fear of scarcity rippled into other markets. Silver and copper prices jumped as investors sought alternatives. The tariff triggered a contagion of anxiety, undermining faith in global trade rules. Gold-backed ETFs scrambled to source bullion, passing higher costs to everyday investors. What was once a safe haven became a source of risk and uncertainty, all from a single policy change. The gold tariff's pain spread quickly from Wall Street to Main Street. The jewelry sector, reliant on gold, saw wholesale prices jump 11% in a week, forcing shops to choose between profit loss and higher prices for customers. But the impact went far beyond luxury goods. Gold is essential in electronics, smartphones, computers, and more, due to its conductivity and resistance to corrosion. The Consumer Technology Association warned the tariff could add $1.4 billion in annual costs to electronics. Prices for everyday tech rose, a hidden tax on consumers. In healthcare, gold's biocompatibility makes it vital for pacemakers and implants. Medical device makers projected a 15% price hike for gold-containing implants, raising costs for hospitals and patients. U.S. gold refining capacity couldn't meet demand, and stockpiles were projected to last only 6-8 weeks. A frantic race to secure gold began, with prices set to climb even higher if the crisis continued. The tariff's ripple effects reached every corner of American life. North of the border, Canada watched the gold crisis unfold with dread. The tariff wasn't aimed at them, but it signaled that no trading partner was safe from U.S. tariffs. Canadian industries, already feeling pressure from a cooling trade relationship, feared they could be next. Energy exports to the U.S. were already down, and factory towns braced for layoffs. Auto exports to the US were already down, and factory towns braced for layoffs. Political leaders called for market diversification, not retaliation, recalling past losses from trade disputes. Canada and Mexico moved to strengthen their alliance, preparing for a future where they might rely more on each other. The gold tariff inadvertently pushed America's neighbors closer together. Beyond politics and markets, tariffs hit real people. A Cleveland jeweler faced impossible choices: absorb soaring gold costs or raise prices and lose customers. In manufacturing, job losses mounted as supply chains faltered. Tens of thousands lost work, especially in auto parts. Factory workers in Michigan worried about layoffs and making mortgage payments. Retailers like Walmart and Best Buy raised prices on dozens of everyday goods. A mother in Atlanta found back-to-school shopping more expensive, with laptops and even coffee costing more. New agricultural tariffs pushed coffee prices up 20%, squeezing small coffee shops. Owners faced a choice: raise prices or cut staff. For many, the trade war was a daily struggle for survival. The pain was personal, not just political. The administration's trade policy ignited fierce debate in Washington. Supporters called tariffs a matter of national security, necessary to protect American industry. Senator Josh Hawley championed the gold tariff as a tool for fairer trade. Critics like Senator Elizabeth Warren called the policy reckless, blaming it for rising prices and chaos. The U.S. Chamber of Commerce warned tariffs could cost 90,000 jobs, calling them a tax on businesses and consumers. Even the Federal Reserve acknowledged tariffs were driving up consumer prices, complicating efforts to manage inflation. The nation was divided. Was this protection or self-inflicted harm? As markets reeled from the gold tariff, the administration expanded the trade war to pharmaceuticals. A new plan imposed a 15% tariff on drugs from the EU and India, set to rise to 150% in 18 months. The World Health Organization warned of global drug shortages as supply chains faced collapse. The EU questioned the value of trade deals with the US, while Canada braced for higher drug prices. A new pricing rule pressured drug companies to raise Canadian prices to avoid slashing US prices. Ontario's health minister warned of a $1.3 billion annual hit to drug costs. US consumers saw out-of-pocket drug spending rise 12%, with insurers warning of double-digit premium hikes. The policy meant to lower prices was, in the short term, making medicine less affordable for millions. Facing an unpredictable US, Canada chose strategic realignment over confrontation. Ottawa focused on market diversification and deepening its alliance with Mexico, aiming for economic resilience. The outreach to Mexico was a deliberate move ahead of the 2026 USMCA review. Canada and Mexico, both targeted by US policies, recognized the need for a united front. Strengthening ties with Mexico and seeking new markets in Europe and Asia, Canada aimed to insulate itself from future shocks. The gold tariff showed that supply chains are fragile and economic interdependence is both a strength and a vulnerability. For both countries, the lesson was clear. The costs of a trade war are ultimately paid at home. Thanks for watching and subscribe to the channel for more updates. Thanks.